Look, I get it. Everyone is screaming. The overall market, the SPY, the Qs, your favorite tickers are all hitting new all-time highs. And everyone is telling you to lock in those gains. Take the money off the table. Be smart. Don't be so risk accepting. Are you a crazy degen? What in the world is going on? I get it. I understand where they're coming from. But what if I were to tell you that the overall market and the Mag 7 and most likely your favorite equity is actually setting up right now to continue this incredible bullish run for the remainder of the year? Well, not only do I believe that the bulls are dominantly in control, and I think that the Santa Claus rally is going to be phenomenal, but I'm not the only one. Tom Lee of Fundstrat just today said that he believes the overall market, aka the S&P 500, can squeeze all the way to 7,000 in the coming weeks. In this video, we're going to be breaking down his reasoning, his thoughts and opinions, see if they really hold any water, or is it just something to say to get a couple headlines. But before we get to all that, if you haven't already, don't forget to like, subscribe, shout out in the comments below. That really does help with the algorithm. So do all that good stuff. I do appreciate it. But with that being said, let's figure out if the bulls are gonna stay on parade. Just for a little bit of context, I'm filming this as the market's about to close on October the 2nd, and depending on the time frame that you trade, as in day trading or swing trading, you're either gonna love today or hate today. Day traders are gonna hate today. I mean, it's been nothing but whipsaw. If you're a swing trader, you're gonna be stoked that we hit new record highs. S&P 500 seesaws after hitting fresh record as US government shutdown continues, which is obviously one of the big catalysts you gotta pay attention to. But here's a look at the S&P 500. We did tag a new all-time high, and we've given a little bit back. Same thing here on the NASDAQ, making a new all-time high, giving a little bit back. And actually, Bitcoin, even though it's not at a new all-time high, which is 124.5K, look at this beautiful breakout and continuation. Not long ago, this was trading at 109,000. This is skyrocketing as I'm filming this to 121,000. So as I said, as a swing trader, if you're bullish, you're loving it. If you're a day trader, you're going to have some different opinions because market open was a brutal vomit. And right now, as I'm filming this, we're getting a little bit of a recovery. Side note, shout out to you if you are in Tesla, gapped up to a sky high level of 470 and has been doing nothing but puking all day. So whether it's Tesla or the overall market, for my short-term traders, what in the world is going on? Well, we could actually see here right in the world of options and options flow, shout out to Spot Gamma, but none of this is random. If you look at the difference between calls and puts in the S&P 500, pretty much flat all day. Some people were buying puts to get the downside gap fill. And in the afternoon, we had some aggression on the call side, specifically 0DTE calls, but overall, not much movement. The really telling thing was right here in the Mag 7. The combination of Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla, say that 7 times fast. You can see right at market open, the green and the orange lines on your chart. That is the call flow. People were taking profits all day. So what did we have today? It wasn't actual bearishness. Granted, there was a little bit in the S&P 500, as I alluded to play the downside gap fill. But really, if you're looking at the intraday action, specifically in the NASDAQ, it was everyone just saying, dude, amazing profits. Yeah, there were some bearish bets, but overall, the delta dropped so dramatically because people were seemingly more than happy to lock in their gains, which brings up the final question of why did we randomly turn right here? What happened at 1130 that we roughly found the bottom? And the answer is this level of 666, 667 actually isn't that random whatsoever. We had profit taking all the way down to this magical level of 6,700. Key technical level, key psychological level, key options level, and that's exactly where the market reacted to today. So we had some bearish bets all the way down, we hit it, they took their bearish bets, then some bullish bets came in, and that's pretty much how we got here to Power Hour. So I just wanted to give you that quick review, especially because you're seeing the power of how influential options flow can be, which is part of the reason actually why Tom Lee is so incredibly bullish. Tom Lee sees S&P 500 topping 7,000 by the end of this year and says, don't be fooled by the shutdown calamity talk. Now, obviously, remember, when someone says something good or bad, whether it aligns with your bias or it doesn't, just because it sounds good, don't just arbitrarily trust it. And just because it sounds bad, well, that's not the only time you should be looking into the opinion. So let's do our best to dive into why he's coming up with this, as I said before, to see if these thoughts, opinions, and reasoning hold any water. According to Tom Lee, the government shutdown is unlikely to derail the stock market's momentum into year end. Lee believes that the suspension of economic data releases from federal agencies is a sidebar issue, adding that past shutdowns have had little lasting impact on equities. The widely followed strategist who called 2025's bull run to an all-time high in stocks expects the S&P 500 to reach at least minimum of 7,000 by December, with potential for further gains. Now, I'll admit it, as a person who, as I'm filming this video, is currently very bullish on the market, I have a lot of money on the line, this is music to my ears. But like I said, just because something sounds good doesn't mean it's actually right. So let's dive into what in the world is going on. We would not lean bearish because of shutdowns. If stocks are down, we would be dip buyers. This is something to be mindful of, as we may hear of dire warnings of calamity because of the shutdown. Basically talking about all the doomsday sayers, all the negative Nancy's out there. Additionally, he also added on to the top of all that, there's a strong seasonal tailwind underway and the upside is higher given the Fed is dovish. So basically, his reasoning for being bullish relates to the seasonality, this portion of the year and really all the way up into January, what's going on with this government shutdown and how other ones have played out, and obviously the all-important monetary policy and what's going on with Fed cuts. With those things in mind, let's really break this down. First up, seasonality. He ain't wrong when he talks about the Santa Claus rally. As you can see, over the past 20 years, from the start of October to pretty much halfway through January, this entire portion is extremely bullish. It's referred to as the Santa Claus rally. That's 20 years worth of data, the past 5 years worth of data with the SPY, S&P 500 ETF, October, November, December, and January, all bullish. Looking at the NASDAQ, same thing, October, November, December, and January, all bullish. So for the first thing we are measuring with respect to seasonality, he is correct. Next up, let's talk about the government shutdown. I totally understand that when you hear those words, government shutdown, just doesn't seem good. And it's really not going to seem good when you have so many people telling you allegedly how bad it is. And it might be bad depending on the thing that you're considering, but exclusively with respect to the actual stock market, history tells us the exact opposite. S&P 500 performance during government shutdowns. The last one we had between late 2018 and early 2019, we actually gained 10%. In 2018, there was another one, we gained 1%. In 2013, we gained 3%. In 1995 to 1996, there was no change. An earlier one in 1995, there was a slight change that was positive. And the only one in recent history, and we're going back to the early 1990s, which was a drop of 2%, that's the only one where the bears actually won. So I completely understand that it sounds bad, but then when you look at the history, the stats, facts, and figures, you realize that the exact opposite is true. So that's a bullish check on seasonality. That's a bullish check on previous government shutdowns. The final thing is, what in the world is going on with monetary policy? What is the Fed going to do with the Fed fund rate? Which actually kind of brings us to something that a little bit relates to the government shutdown. The government shutdown is likely to cement additional Fed interest rate cuts. So I know we're not going to be getting the jobs number when we normally expect it, which is important to the Fed, but this whole chaotic aspect is actually increasing the chances of an upcoming Fed rate cut in late October. According to the CME Group, the Fed watch tool here, for the October meeting, October 29th, there's a 98% chance that we in fact do get a 25 bips rate cut. If we're looking at the betting markets, according to Kohrs, there's an 89% chance that we get a 25 bips rate cut, and according to Polymarket, same thing, 89% chance of a 25 bips rate cut. I understand completely that we're a couple weeks out, so there's a good amount of time there. And in that time, we're finding out about a government shutdown. So obviously the odds can dramatically change. I completely understand. But at this moment in time, when we're looking at a dovish Fed with respect to monetary policy, bullish seasonality, and historically, whenever there's a shutdown, more often than not, the bulls win. Well, I'm seeing bullish checks across the board. Of course, this is not a certainty. There's no such thing as a guarantee when it comes to the market, but it does really make me think 1, 2, and 3 extra times when everyone's telling me, hey man, take your gains because we're at new market highs. We've basically been at new market highs for days and weeks, and if not months now, and guess what? It keeps on going. If you are a trend following trader, that's exactly your job. Ride the trend as long as it lasts. It doesn't mean try to pick the absolute top. Of course, these are my own thoughts and opinions, and I guess in this video, a little bit of Tom Lee's own opinions, but I would love to hear from you in a comment below. If you're bullish, are you going to keep riding this trend, or are you just going to lock in your gains now because you're enjoying how green your portfolio is? Like I said, let me know in a comment below. Folks, that's what I have for you today. I appreciate all the good vibes. I'll catch you in the stream tomorrow morning. I hope you're watching this show in time because we're going to have a big old payday Friday. We're going to give away some accounts and some cash, so I hope to see you there. Like I said, thanks for all the good vibes. I'll catch you in the next one. Peace.